Hello everyone, I am Pratap here. We are at lesson 22. It is about the lower time frame zone as an horizon to the higher time frame zone. That means a lower time frame zone is responsible for the creation of the higher time frame zone. It is a new strategy developed recently. Again, recently means you may watch this video after few years. So that's why I want to say today is 1st June 2024. I am recording this video. So last 3 months we've been studying this particular price action and developed this strategy. So that's why it is a new strategy as on 1st June 2024. So in this lesson, we discuss about the concepts behind this new strategy and also with a few good examples. And all these concepts are having dependency on the earlier lesson. If this is your first visit to our channel, all the training lessons can be accessible at our NeoStock YouTube channel. So from our channel, click on this community tab, you get access to this post. And this post is having a YouTube playlist link that will take you to the training lessons. Just click on this link. I'm clicking on the link and now we are into supply demand zone price action course. Here you have all the training videos are available. You just need to scroll down to the bottom of this page. Here starting from lesson 1.1, you have all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel. Please join in the channel. It will be helpful to you. Each time when we release a new YouTube video, we'll provide an update in the channel, or any other important updates also we will provide in the channel. Now let's get into lesson 22. So lower time frame zone as an horizon to the higher time frame zone. Please don't get confusion with the words LTF and HTF. They are the general English words. I'm not talking about the concepts you learned about LTF, ITF and HTF. I'm not talking about those concepts. In this lesson, whenever I say LTF, it is a lower time frame zone. From the current time frame, it could be any lower time frame zone. Similarly, higher time frame zone means from the current lower time frame zone, any higher time frame zone. So these are the general English words. Okay, now let's get into the session. As I told you, it is a newly developed strategy for finding the zones having strong institutional order flow. Because I am doing a lot of research in finding the zones having strong institutional order flow. So we already identified a concept called high liquidity zones. Now we are identified another concept called a lower time frame zone is an horizon to the creation of the higher time frame zone. That zone is also having strong institutional order flow. So I observed for the last 3 months, I spent a huge amount of time in studying these patterns or price actions, and I observed sometimes higher time frame zones are getting created by picking up the order flow from the lower time frame zones. It is not the case with every time. Please remember, sometimes. So those sometimes, whenever these such kind of zones are created, you should observe those zones. Probably they will be giving you good profits. Okay, now let me explain this point in detail. Sometimes higher time frame zones are getting created by picking up the order flow from lower time frame zones. Which lower time frame? Mostly the immediate lower time frame. That is the way you should understand. Suppose your higher time frame is a weekly, its immediate lower time frame could be daily. Suppose the higher time frame is a daily, the immediate lower time frame could be 1 hour or 75 minutes. Or if the higher time frame is 75 minutes or 1 hour, its immediate lower time frame could be 15 minutes. You may ask a question here, is it always immediate lower time frame? Can't it be one more or two more time frames lower? Yes, it can be. But the immediately lower time frame to the higher time frame, in that concept we have a very strong success rate. For example, weekly, immediate lower time frame is daily. Suppose if weekly zone is created from daily zone, the daily zone is having a strong order flow. It is also possible a 75-minute zone or 1 hour zone also can create a weekly zone. That is also possible. But the problem is, when we jump one time frame, you will be missing the concept called zone confluence. So between 1 hour zone or 75-minute zone and weekly zone, there won't be any daily zone confluence. That will give us a disadvantage again later. So that's why I am telling you, give always the first priority to the daily zone that is created the weekly zone, or 1 hour zone or 75-minute zone that created the daily zone, or the 15-minute zone that created the 75-minute zone or 1 hour zone. Give priority to such kind of lower time frame zones. That means the immediately available lower time frame to the higher time frame. So that's why I repeat my statement again. Sometimes higher time frame zones are getting created by picking up the order flow from the immediately available lower time frame zones. I'm stressing on that point. But one time frame lower or two time frames lower or three time frame lower also will work. But immediately available lower time frame is having more success rate. That point you have to understand. Hope I made it clear. It is an indication to the strong institutional order flow in that lower time frame zone. It is an indication there is a strong order flow. Many times these lower time frame zones are giving good results. Look into this. So we have a higher time frame candle. And there is a lower time frame which is part of this higher time frame candle. Many times we see. If you go down to one time frame or two time frames, you will see lower time frame zones within this area. In this example, let us assume in this candle we have a lower time frame zone which is already created before the zone creation. Now, a zone has been created, rally, base, rally, and this zone picked up the orders from the lower time frame zone, and then the zone is formed. Now let me draw the higher time frame zone. Currently, let us assume the chart is a higher time frame zone chart. We have a rally, base, rally. So a higher time frame zone is created. How it is created? By picking up the orders from the lower time frame zone, and then this zone is formed. That way you should understand. Especially the base. The base is very important because in a zone, the base is having the institutional pending order flow. Of course, in this area there is a pending order flow, will be there. But in this lower time frame, strong pending order flow will be there, or a huge order flow might be there. That is the way we are identifying with this technique. And one more important point, it's a very, very important point. The lower time frame zone is having a zone confluence with higher time frame. You already know, in lesson 16 you learned zone confluence. Higher time frame zone is overlapped with lower time frame zone is called zone confluence. But the most important point you should observe where the zone confluence took place in this concept. Is it exactly in the middle of this? Middle means inside higher time frame, or is it at proximal line of the higher time frame zone, or is it at the distal line of the higher time frame zone? That observation is important. In this strategy, always the zone confluence is at the distal line of the higher time frame zone. This is a very, very important point. I repeat again, the lower time frame confluence with the higher time frame zone will always takes place at the distal line of the higher time frame zone. Then only this strategy will be applicable. Otherwise, this could have been a different strategy. Definitely not. A lower time frame zone is the origin of the higher time frame. In this strategy, always the zone confluence should take place at the distal line of the higher time frame zone. But what is the danger? If the confluence is at the distal line, there is a possibility that higher time frame zone might be violated or it might be pierced. Anything can happen. If that is the case, is there any danger? No, no danger at all. Our orders are picked up from lower time frame and it gives the results. But many people, when a higher time frame zone is violated, immediately they feel market will now go down because it is a demand zone. Demand zone is violated. They think like that. But actually, it won't happen. The reason is this lower time frame zone is having a confluence with higher time frame, and the real order flow is in the lower time frame. Again, this order flow will push the market up. But what people will think, the higher time frame zone is violated. They want to exit the market. Institutional order flow will get the liquidity and they capture all their orders and again push the market up. But remember, this is not a bull or bear trap concept. It is not that. Because in that, the zone will be completely below the higher time frame zones. And more our traps will be at 5 minutes level or 15 minutes level. But here it could be anything. Higher time frame could be a weekly zone and lower time frame could be a daily zone. At different time frames, this concept will be available. Can be used. Okay, now what happened? After this, let us assume prices are moving and here some supply zone is created. The supply zone again pushed the prices down. Now prices entered into this zone confluence area. What is that zone confluence area? The lower time frame zone and higher time frame zone confluence. And that confluence is actually responsible for creating this entire higher time frame zone. See again how this order flow in this area again pushed, see the rejection. After continuation to that, again prices reached the higher time frame target. So obviously you will see such kind of price action in this particular concept, newly developed concept. I have given a name for this concept, LTF zone, that is lower time frame zone, as an origin to the higher time frame zone. So this is the name I have given for this strategy. I repeat again, lower time frame zone as an origin to the higher time frame zone. That means lower time frame zone is responsible for the creation of the higher time frame zone. That is the meaning. Okay, now let's look into the examples so that you get better clarity about this concept and also you understand the real power of this concept. I'm going to give you 3 examples for 3 different time frames. The first one, let me start with Nifty. If you look into this Nifty daily chart, here you have a drop base rally is there. We have drawn this daily zone, drop base rally. You may ask a question, here also we have a drop base rally is there. Yes, this is also another zone, but we are not interested in this drop base rally. The reason is this drop base rally is going to be the lower time frame zone that will create the higher time frame zone. That means that is the responsible for the creation of the higher time frame zone. That is weekly zone. That means this daily demand zone will become a lower time frame zone for the creation of a higher time frame zone. So now I am changing the time frame to weekly. So this is the weekly time frame. And in this area, you can see this daily demand zone, which we want to use as a lower time frame zone. Let us see the price action after this. A drop candle is created. After that, a base candle is created. But see the base from where it picked up the orders? From the daily zone it picked up the orders. After that, rally candle. So drop, base, rally. Let us draw the zone. So this is the weekly demand zone. So that means this daily demand zone is the responsible for the creation of the weekly demand zone. That's why we can say daily demand zone is the origin for the weekly demand zone. I repeat, daily demand zone is the origin for the weekly demand zone. So finding this origin is very, very important in this strategy. Because we identified this origin, we can say next time again orders are entering into this daily zone or very near to the daily zone, order flow again will push the prices up. Let us see what happened next. And now I changed the time frame to daily from weekly. Earlier it was like this in the weekly time frame. It was like this. Now I am changing the time frame, so the chart looking like this. This is the daily chart. So now let us observe what happened on the daily time frame. So if prices further moved up, and here it reached the all-time high, and again moving down from all-time high. So this is the all-time high. Here we have drawn a all-time high value. Can we draw a supply zone as a as a drop-based drop? No, because this is not a base candle. If we add the hidden body, this is also going to be a rally candle. We have a drop candle, rally candle, again drop candle, and there won't be any base candles. Such kind of zones will be violated easily. In case if you draw a zone, they will be violated because it is not a valid zone. Okay, anyway, our interest is not on this. Now next, after reaching the all-time high, probably institutions might have kept a strong order flow at the all-time high. Actually, here, now again from this all-time high, prices were down, and finally they reached this, the daily zone and weekly zone where they overlapped. It reached that area just few points before. Again started moving up because they're all put a lot of order flow in this area just before entry buffer. So much of order flow is there just before the daily demand zone. Again it picked up. Anyway, we keep some entry buffer and our order also would execute here. And see the move. Once prices are almost entered into this daily demand zone, which is responsible for the creation of the weekly demand zone. See, from there, market is again pushed up. And finally, market, what happened? It reached the all-time high. Prices went a little above all-time high and a new all-time high is created. How much move it has given from here to here? 1,000 points move. This daily demand zone, which is responsible for weekly demand zone, the daily demand zone near the zone, it has given a move up to 1,000 points. Within how many trading days? Let us assume this is the first trading day where we took the trade, and the second, third, fourth, fifth, sixth, seventh, eighth. In 8 trading sessions, Nifty has given you 1,000 points. What is the reason behind it? The reason is the daily demand zone, which is responsible for creation of the weekly demand zone, is having a strong order flow, and that gave a very big push. This is how we can interpret. So this is an excellent. So this is about Nifty example, daily as a lower time frame and weekly as a higher time frame. Now let us look into next example. Next example, I will take 75 minutes as a lower time frame and daily as a higher time frame. Next chart is about Bajaj Financial Services. Bajaj FinServ, that is a Bajaj Financial Services. It is a 75 minutes chart. And this chart is having a drop, 4 base candles and a rally candle. So excellent zone. But what is the importance of this zone? Because this zone is going to be responsible for the creation of the daily zone. So this is going to be a lower time frame zone. And another, the newly created daily zone will be a higher time frame zone. See here what happened on the same 75. See the price action. Price has moved up and again came to this zone. In this area, a new daily zone is created. Picked up the orders from here and created a new daily zone. How the daily zone is created? That we will see in the daily time frame. So now I am changing the time frame to daily. See here. Have a drop candle, picked up the orders from this zone, base candle is formed and a rally candle is formed and a new daily zone is created. Now draw the base. How do you write the base? Base is lowest of these leg in, lowest of base candles and the lowest of leg out. Among these three, leg in candle is having the low value. That way you draw the base from here to the high of the base candles. Low of the leg in to high of the base candle. See here. Now we got a new daily demand zone. Now if you look into this daily demand zone, from where it picked up the orders? It picked up the orders from the 75 minutes demand zone, which is the lower time frame demand zone. So from the lower time frame demand zone, the daily demand zone picked up the orders. So this is what our new strategy. The 75 minutes demand zone is the origin for creation of this daily demand zone. Because this is the origin, this origin will be having a strong institutional order flow. Now let us see what will happen next time when prices are entering. But again, let me shift back to 75 minutes time frame. So this is how it looks like after drawing this zone. See, after that 75 minutes candles, they moved up, and again after some time the prices entered into this overlapped area, the daily demand zone and 75 minutes demand zone. Their order flow is very strong, picked up the orders. See the huge rejection from here and a continuation to this. See here, this was the one rejection we got, continuation to this. Prices moved up. And after that again from here again prices came down and once again it entered into the overlapped area between daily zone and 75 minute zone, that is zone confluence, but yet distal line of the daily zone. So once again picked up the orders in this confluence area, zone confluence area. See the push again with a gap up. That means it's a rejection. That's why there's a gap up, and after that again prices moved up. This is the candle. In this candle, see here there is a gap up, and after that see the move. It's a very big move it gave after that. Of course, one of the candles came to the daily zone, but picked up the orders before entering into overlap. But see the recently once again prices entered into this overlap area, and again from here see the push. This is the way Bajaj FinServ is working, by picking up the orders from this area. But definitely one day this lower time frame zone will be violated. See, every zone should have an expiry period, but we never know when it is. One day the order flow will be completed, or one day institutions may not add any new order flows. That day there won't be any order flow, maybe that day it will be. But till that time, we get a lot of trade opportunities. Maybe the last time, when it is having expiry period, that day maybe our trade might be stopped out. That is okay. But meanwhile, we got a lot of good profits. A stopped out trade is only risk is very minimal. That way we plan our trades. But the point you need to understand, how strong these lower time frame zones are having, which is responsible or which is the origin behind the creation of the higher time frame zone. That is what you should understand. See, there is a possibility that sometimes this daily demand zone, that in this example it is a higher time frame zone, might be violated. And then prices entering into the lower time frame zone, in this example 75-minute zone. Let's say. One day it will happen. Again it will pick up the orders from this area and again it will move up. What people will think, the moment daily demand zone is violated, market maybe on this particular stock, the prices will further go down because the daily zone is violated. That way they think. But the 75-minute zone just below, because still the overlap is not completed. There could be still strong order flow might be there. Again it will push the prices up. That possibility is also there. Let us look into such kind of example. The next example. But next example again I will change the time intervals. A 15-minute zone and 75-minute zone we will take. So next one is Wipro. So the lower time frame zone for Wipro is 15 minutes demand zone. It's already created. We have a legging candle as a failed ERC. Failed ERC you can use as a legging. Then base candles and a rally candle, you have drawn a zone. Failed ERC, you have two choices. One choice is you can draw a zone like this, or you can extend up to the low of this candle. But the danger is sometimes the width will increase. But anyway, this is good enough for time being. See what happened here? Now I am shifted to 75 minutes time frame. In the 75 minutes time frame, the daily candles are created. Two candles, and both the candles picked up the orders from this 15-minute zone. And after that there is a leg out candle. Now we can draw the 75-minute zone. See, this 15 minutes demand zone is responsible for the creation of the 75 minutes demand zone. In technical words we can say 15 minutes demand zone is the horizon behind this 75 minutes demand zone. 15 minutes demand zone is the horizon. The horizon is having a strong institutional order flow. That is the way you should understand this strategy. Now let us check what happened after that. See, after this zone creation, prices went up and going down again, going up and down, and finally see here a huge downfall in Wipro stock. See, from here, nearly from 546 rupees, it was coming down. Finally 440 rupees, more than 100 rupees is down. Finally it reached the horizon which is responsible for the creation of this 75 minutes demand zone, and see the move. It gave a very big move. After that further moved up, but currently I am showing you only a small part. In the next slide I will show you how further it moved up. See, it picked up the order flow from this overlap area and then started moving up. Because that 15 minutes demand zone area is having a strong institutional order flow. See here in this candle, the overlap area it picked up. See the move again. It gave a very good move. After that once again prices were coming down, again moved up, coming down. Finally once again it reached the 15 minutes demand zone area, and now you should also observe the 75 minutes demand zone is violated or pierced. Pierced zone is as good as violated zone. But still the orders are picked up and again they moved and prices reached near to the next 75 minute zone, drop base drop. Moved up again. Once again in the recent candle entered into the zone. See the rejection. Maybe from the next trading sessions it may go up, because this is the most recent data, because the 31st May 2024 is the Friday. So the last trading session. Today is a Saturday holiday. So that's why it is the most recent data. And already Friday it gave a trade from this zone. See in this candle it gave an entry, and see the move. The move near to this 75 minute supply zone. almost close to the 75-minute supply zone, it reached during the intraday. After that, once again prices came in the last hour of the market, and see again prices moved up. Now let me change the time frame to 15 minutes chart. This is a 15 minutes chart. I'm sorry, here in the heading I didn't, mistakenly I have typed 75-minute chart, but please treat this as a 15 minutes chart. This is a 15 minutes time frame chart. See here, Wipro Limited 15 minutes. This is a today's candle. Today it picked up, I think around at 10:30 or something. It entered into the zone, picked up the orders and moved up and reached up to this 75 minutes area, supply zone area. Maybe the supply zone area again pushed the prices down. And once again it picked up the orders. This is during the last 30 minutes of the trading session. See, last 30 minutes again it moved up. But now we need to observe continuation to this again. Maybe next few days, maybe prices may go up anytime in the next few days. Maybe it might be started moving up. It may give very good return for the people who are holding. But the point you should observe, 75 minutes zone is violated. Still 15 minutes demand zone is working because there is a strong institutional order flow. This is the power of the horizon, which is responsible for the creation of the higher time frame zone. I repeat again, lower time frame zone is the horizon. Always it is the horizon behind the creation of the higher time frame zone. So such kind of price action will always help us in providing good returns. So that's why it is a very important strategy, and it is a latest strategy. Obviously, whoever is attending our NeoStock videos probably aware of this. Others are probably they are not aware of this strategy. Maybe after few months or few years, people will come to know about this strategy. More and more people. But until then, you people can best make use of this strategy. Okay, this is about lesson number 22. Hope it is useful to all of you. If you are having any questions, please put them in the comment section. I will try to answer. In the upcoming session, let's discuss about the NeoStock reports, monthly income trade, weekly income trade, daily income trade, or hourly income trade. Because in the recent time, many people are asking several questions about these reports. You have started using these reports. And many people are asking repeated questions sometimes. So I decided maybe if you have a separate session, probably you may not get, all your questions or majority of your questions, you will be getting clarification from the session, from the next session. Next session, I don't know, I'll be doing it in the coming week or maybe after one more week, but I haven't any plans because as I told you earlier, advanced strategies, I take more time. So far every week at least I've been giving you a new video, but sometimes I want to take some break, but I'm not sure next week this will be available or not. But I want to make it as early as possible because people are started using these reports. So you have to get maximum benefits and when to use these reports, when not to use, and when these because these are all the bullish and bearish trade setups. When more likely these zones will work, when they will be violated, possibilities, and how to get a maximum benefit from this video, from these reports, to get better profits. So all these things we will discuss. Okay, hope this video, the concept, the strategy in this video will be helpful to you. Let us all meet again in our next video. Thank you.